Hi, everybody. This is Gardine with Sentiment Timing, and this is our technical video report for Thursday, March 30th, 2023. I closed out, I had 2/3 long position with the SSO. I closed it at the open. I just really, I'm seeing some signs that the market's a little bit tired right now. And it doesn't mean that we can't continue to go up, but if we look at the 15-minute chart here, you can see we have a pretty defined sell signal. So at some point we are going to get some backing and filling. This is obviously going to be the line in the sand that the bulls are going to want to try to defend right around that 40-30 level. If they don't, then the pullback's probably coming down to the 39.90, possibly even down to close the gap at the 39.72. So those would be really the targets. But I want to go before I go into all that. I want to kind of answer a few questions because we've gotten a lot of new subscribers, and I've been getting some questions. So I figured I'll just go over it in the video here. So basically, the first question was asking about fib retracements. Now, fib retracements can be drawn from anywhere on a long-term basis. I like to go with the current move. So this fib retracement that I took from these lows in the March of 2020, where we had that massive rally after COVID ended, or whatever. We were in the middle of it. I don't know. Who knows? But anyway, we up to this December 2021 top. So this is the current move that I'm measuring. And basically what it is you're just putting your, to the low to the high, and then it breaks it off into 23, 38, 50, 62, 78%. So these are your fib numbers. Now, the reason why I'm showing it is you can see that when we came down from this low to this high, we went right exactly down to the 50% retracement, and from there we've had a nice rally. So if we're what you'd want to do if you're trying to look for the resistance end of it is I'm going to kind of move this and go to here because I think they're following me on my each chart I go. It's pretty annoying, honestly. But in any case, so now let's just say we want to look at where's going to be the possible topping part from this high to this low. So you just simply switch them around, and meaning that you have the come on. I've been having so many problems with my computer. Okay, so basically what you're doing is you're going to put the 0% at the low because you're measuring the top part, 100% at the top. So what that basically means is that if the S&P goes all the way back up to the 48.24 level, that would be 100% retracement. But going from there, you can see just from here, we're kind of having some trouble again at the 50% retracement line. So if the bulls can get through that, then you can see the next line is the 62% retracement. And if you remember what I put in the morning notes, I said I wouldn't rule out 4,300 to come into play before this move is over. And really, the thing that we that I'm looking at, and the reason why even if we get up to this level, it's going to fail is now you what I do is I like to start using my indicators to see where we are. So we're pretty we're kind of neutral to oversold on the momentum, stochastic momentum. But that gives it a little bit of room to get up here. But this is where the concern is. Unless this is going to fix itself, we have sell signals on a weekly chart. So that means, and that kind of lines up with what Woody is looking for at the next topping zone. That it's going to it's going to be pretty severe to the downside. Now, it doesn't mean that we have to take out any lows, but it's gonna last longer than people are anticipating. So this has given us the red, a red flag as far as expecting that we're in a new bull market that half the people are talking about. Now, if we go to a daily chart, now this is kind of telling us a different story because here you can see that we had a good move down, and then from this we you can see we had bullish divergences in place. So these are the dailies are giving us buy signals. We're into the overbought. So again, it leaves the door open to be able to make a move somewhere up into the 4150, possibly even up to the 4300 before everything is said and done. And the one thing is that we have the bulls time period. is, quickly, say, approaching to where the bull friendly is going to be kind of neutral to turning bearish. And it doesn't, like, when we give these turn dates, it doesn't have to be exactly on that date. It's a time period that you want to watch. And that's where we match everything up with sentiment, and then, our regular indicators to match up that time period. And that's what gives us a really good idea as far as when a low and a high is coming. So this is giving us buy signals, as the longer term, the weeklies are giving us sell signals. So that's been, we haven't really had any big trend because things are offsetting each other. So now if we go to a 60-minute chart, here you can see there are no bearish divergences. Go to a 15-minute chart, there are bearish divergences. So what this is telling me, just putting all this together, is that we're most likely we're going to see some backing and filling, whether we have to make a new high and come up to the 40.75, but at some point we're going to get a pullback and probably test the 200-day moving average on the 15-minute chart. That brings us down to the 39.90. Again, I'm leaving the door open that we come down and close the gap at 39.70, and that's why I really closed my third of my position when we are here. Now, if we start getting up to these levels here, up to the 40.77 level, and we start to see bearish divergences, then I'm going to move to cash and see if we, can buy back down at the 39.90. But this would probably be what we'd be, probably one of the last long trades that I would be comfortable just making blindly and just turning it. I'd rather turn into trade mode where you just take a little bit and that's it. But because the next bigger move is going to be to the downside from these levels, even if we get up to the 4,300. So right now, we have this in. I pointed this out in the actual chart today that we may be forming a head and shoulders pattern, and that's what. Oh, hang on one second. So this is your head and shoulders pattern where there's the left shoulder, here's the head, and now we turn around and we're making the right shoulder. I don't believe this is going to be in play because I still think that we're coming up to somewhere between the 4150 and 4300. And really, my main reason is because the bullish divergences. Seeing a move from 38 to 4,000, that's not really a big enough move for daily bullish divergences. For a 60-minute chart, it's worth it. But so I don't think this is going to play out as it is. What I can see happening is this is going to be the right shoulder. We come up and then, hang on one second. Let me just do this. So we come up here, make the head, come back down, and then we make a right shoulder. That actually would fit this profile a little bit better, where we're making the top up here. But I'm open-minded. I'm not married to these patterns. I'm just kind of showing you what's going on. So again, we like just looking at the retracement level part, you can see 50% is exactly what held down the rally. If the bulls can get above it, then we're looking at the next move coming up to the 43.10, which is the 62% retracement. And now this is where things, this is kind of what I look at every day when I put my stuff out. I don't just throw things out of the blue on what's going on. So this is that inverted head and shoulders pattern that I was showing, where this is the left shoulder, here's the head, here's the right shoulder. Now, this is actually has a pretty big wingspan on it, and it's looking for a move to go almost 200 to 240 points above the 40.80 if it breaks out of that. And what that means is that we're coming up to the 4,300 level, which I was talking about. So this pattern that's in place, where we're looking at the big inverted head and shoulders here, which is bullish, it could play out into where it comes up to the 4,300 level, and then from there, that will now take this and make this the head, and this is going to be the first shoulder, and then we're going to come and make another one. So you can see how these patterns would, how they can play out, and this is really what I look for, on a daily basis. Or what are the patterns telling me? What are the what are the technicals telling me? and just really make the trades from there. So that's why I took with this gap up. When you have two gap ups in a row, you don't want to be riding your luck on it. We had a quick another 5% trade on the SSO. So you take it off. We're running with a third. If we start breaking out and get up to 41.50 and I have to run with just a third of a position, so be it. So anyway, the important support areas are going to be between the 39.92 down to the 39.81. If the Bulls lose this, then you have your last line at the 39.50, and then you start coming down to the 3900. On the upside, the Bulls got to get through to 40.80. If they do, there is gap resistance right here at 40.90, and then above that, we're heading up to the 4100. So just stay open minded right now. We're overbought on the hourly chart, but we don't have any sell signals. We're kind of overbought, but we have sell signals as well, which is saying that we should get some kind of backing and filling. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.